what I want to first do with you is get straight into the nitty-gritty with an R3 S3 system. I'm going to tell you precisely what it is, show you the profit line and how it's been going, and then you're going to show me yours. Now that's tongue-in-cheek because I know few of you can, because you've been busy, you've been sick, and I'm not poking fun. I understand that some have. That's fine. But at the same time, we need to be progressing because there's lots to move forward. I want to go into the gap in detail, and then I want to move on to 20, 50, 100 simple moving average on hourly systems. Now, there's no point in me moving on to these other things when we haven't even got the first one done. So, let's go into our first one, and I'm going to show you how it's been going. Okay, this little fella here, I happen to cheat in that I built it manually, but then I coded it in to an auto to see how it was going with its profit line. I'm pretty happy with it. I'm not entirely happy with it. There's a few changes I'll make to it yet. But as you can see, the profit graph goes up. This is on USD Japan. It's on the 10-minute chart. Now, when we were looking at R3 S3 at the time, I was making comments along the lines of short only. I don't think I'll be taking longs. Anything shorting on USD Japan is generally going to do well. When we mathematically model things, we actually see some of this come to light. But what I also found was something very interesting. Let me show you the longs. A lot less of them, but a lot more stable. Okay, so probably a third the number of trades. In fact, let me see exactly how many there were. Okay, there's 31 longs, and I had 82 shorts. So this will just give you a bit of an insight into if you want to do course 2. But so less than half were going long. But what I found is, because remember I was almost writing longs off on USD Japan. What I found is when they happen, they're gunpowder, as in they work really well because it's not expected. So when it happens, it'll shoot up there. So that's the longs. Now, if I just look at shorts, now if I just break this down and just look at shorts, we can see there's a lot more. There's 82 trades there, and it seems to go through periods when it works well, but also there's periods when it works badly. And so when I say I want to do just one or two more fine tunings, a simple way to bring out, see how there's 2 patches in the middle where it fell quite a bit? A simple way to weed those 2 bits out is just an overall, say 100 simple moving average all the way through. There's just an overruling filter for yes or no, and that would just drop them out quite nicely. Okay, when I was putting this together for you, I just didn't get around to doing that because I was actually working on another system. But when you combine them together, can you see how, just watch that change, see that? So that's longs and shorts together, it smooths it out, and it's very nice. Now, if we go to the summary, I've kept the dollar values to 0.0, like 7 cents or something, so you can't make dollar value assumptions from it, but all the other stats are relative. Total number of trades I looked at was 113 for my homework. I hope you did yours. That's a nudge in the ribs. And I've done my testing from the 4th month of 2007 to the 8th month of 2009. So my testing I did went over 2 years and 4 months. I found that on my long trades, the maximum number of stop outs in a row is 1. So if I have a weak stomach for stop outs, then I'll just take my longs, because the worst case, if I get 1 stop out, the chance of another stop out after that is almost zilch. And in the last 2 years and 4 months, that has in fact been the case. Now, I can also expect 5 wins. With the shorts, I may have 4 stop outs in a row. So that's the worst case I need to prepare myself for. But number of wins on the short side in a row is 13. So when I go for a winning streak, I can expect to go for quite a big winning streak. Now, I will not question this strategy until 5 stop outs in a row happen. If I have 5 in a row, then I call it a day and I say, right, something is wrong. Until then, I say nothing is wrong, because it is within the bounds of what I've found over the last 2 years and 4 months. And every time a new trade comes up, I feel great about it. And while ever this graph keeps pointing skywards, I'll keep applying it. If it gets average, I won't. Now, you'll notice see how it's pulled down just recently? through that last bit there, and it's looking similar to these points before. Well, what's interesting is you can think, well, that's ugly, that needs to be weeded out, and yes, I intend to do that. But also, just after that, we also have times when it just accelerates away again. Okay, here's an absurdly advanced point, but you'll appreciate it for what it's worth. When you build systems like this, you can draw trend lines under them and you can see the profit graphs bouncing off the trend lines, and that will weird you out when you think about it. It makes no sense. But it doesn't. If you think about it even more, what happens, I can't prove it, but I can't see any other way it would be, is a lot of the sophisticated computer systems see the same thing. If it's moved away from the trend line, then people may stop using it until it comes back, and then they'll turn their systems back on. More people turn their computer systems back on because more are kicking in. Then it starts being more profitable again. That system does overall, and then it bounces again. So the idea that a profit line can bounce off a trend line, there's how it works. So there, I'm sure I'm probably the only person in the whole wide world who would tell you that. Okay, number of winning trades I had was 74. Number of losing trades was 37. My average success was 67% successful. On the longs, I'm running at 77% success, quite acceptable. On the shorts is 63. So when I'm looking at this, I would say I don't need to touch my longs. I think they're fantastic. I think my shorts are dreadful and need work. As you can see, my shorts, 4 stop-outs in a row is not acceptable for me. I'd actually only have a maximum of 3. And 63% success on the short side's average. On the long side, it's really good. Only 31 trades for the long side over 2 years, 4 months. Yeah, it's a short sample size, but guess what? I absolutely every time care more about how long the sample size has been more than anything else. And this has been a long sample size, so I'm confident in it. The other thing that makes me confident in it is if I don't have a huge amount of filters. I mean, if I had 20,000 rules, and originally there was 2,000 trades that made up the long side, and I whittled it down to 31 with just rule after rule after rule, then it's what's called shaping. Yes, it would have been narrowed down unbelievably, and yes, 31 would be a bad sample size, but because I've only got about 3 rules, and the sample size on the long side started at about 30 something, it hasn't been shaped at all, so therefore 31 in this case is strong. I hope you understand that. And then it tells me maximum time in the markets, maximum days to recover, and all those type of things. So that's what I plot. But anyway, so that's the long and the short side. Let me tell you now how it's working, and then we'll go have a look at a few on the chart. Okay, this is how it's working. It's USD Japan 10-minute chart. It's calculating on the close of the candle. When I'm within 18 pips of R3 or 45 pips of S3, then I go long or short respectively. I have a 27 pip profit stop on my longs. I have a 30 pip profit stop on my shorts. I only take the first opportunity each day, so the first time it gets close to R3 or S3 for the day, I take it. Any time after that, not interested. When it's within 5 pips of R3 and then it's the close of the 10-minute candle, then I say close enough, I'm out. And if it's within 10 pips of S3 on the close of the 10-minute candle, then I say close enough and I close out. Now, if intra-candle of the 10-minute candle it goes on and hits the profit target, then good on it. But if it came close and then stopped that close, then I say that's close enough, I'm out, just to avoid someone front-running the R3 or the S3. So that's all the rules. I've just told you the whole lot. Yeah, I've handed you a trading plan on a silver platter. The only reason you wouldn't use it is if you don't like the stats. Now, let me show you some examples of this. So here we are. Let's go find one. Here's our first one. It's a short and it stopped out, and I'm going to show you why it was entered. Okay, remember the longs are better than the shorts. So this one obviously came within 45 pips. That's why it's entered. Now you say, Greg, it's up above S2 and it's above S1. Why are you going towards S3? Yes, but what I'm saying is it came within 45 pips. And that's why I went for it, because we're extra sensitive to the downside. We are happy to go for more of a run. And that one stopped out. Let's go have a look at another one. Now, what's interesting, before I go any further, is remember on this graph, what have we seen for the last 1, 2, 3, 4, 5 trades? Stop, 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 stop. And it looks quite bad and drop down. Okay, so it looks like a failing system. Now, when you look at this overall graph, you go, yeah, that's pretty good. I mean, if I had my last penny, I wouldn't apply it to it, but if I had a big account, I'd put a very small part of my account on that because I can see overall it's going to keep growing. I don't mind it. It could do it with a bit of a polish, but yeah, not bad, Greg, not bad. Then when you go look at the chart though, like we are the candlesticks, and you see stop, 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 and you're like, oh, it's not doing so bad. But that's because it's just this bit through here. But what's interesting, I'm going to keep showing you, 4 or 5 stops. But then when I get to the peak here, I'm going to be able to show you for about 6 months, about 9 months, win, 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 win. And at one point, I'll be able to show you 13 wins in a row. Okay. Now this is the interesting point. When you build a graph like this, you go, oh, brilliant, excellent, I'll apply it. And I do. And then you have one of these bits through here that don't look so bad. Like this bit down, this middle bit, one of these pullbacks, and it don't look so bad. But when your live account has to weather it and you have to go and you actually look at it, you go, hold on, that's actually 2 months. And that's actually 1, 2, 3, 4, 5. That's like 5 or 6. Okay, there's the intermittent up, but overall it generally fell for 6 or 7 trades. So I just got stopped out about 6 or 7 times with an intermittent win in between. That's really hard to take. And so for us, that's why when you're building a system, you just want to be a bit careful about that and think, hold on, maximum 3 stops in a row, and it's got to be a real 3 stops in a row. I can't have these areas where for 2 months I'm just losing because it's going to be hard on my psychology. Now, my psychology, this wouldn't affect me. Not because I'm clever, not because my psychology is better than yours, it's not. In fact, it's probably worse. That's why I auto a lot of the stuff, so I can deal with these. What I do is I put a very small amount of my account on each idea, and because each idea is just a very small amount of my account, when I have 2 months or something like average like this going through here, it's a very small problem, and it bothers me in a very small way, right? But because I've got so many small systems, it makes for some big trading. Okay, and if one of the systems goes sour, it affects me in a small way. But due to the amount of them, I was saying to Brendan today, I haven't hit it yet, but I'm aiming for about 250 completely unique different systems running at the same time. I've just ordered a new computer this week to help me run them. Okay, so that's just a bit of an insight. So, with that in mind, I'm going to keep showing you these systems, but you're going to expect to see losing, losing, losing. Here we are again. Losing. We're going to see about 5 of these. Got close to within 45 pips of S3 and then stopped. Let's go find another one. Okay, here's a long and it worked. Remember, we like the longs. The longs seem to work quite well. Okay, there was a lot less of them. There was only 31 of them. There was 82 shorts. But when a long happens, it's quite strong. I also made the comment that USDJPY falls and you'll have a lot more fun building anything that goes short than long. But when a long happens, it just bounces up quite strong because the whole market is surprised. And if you want to have an idea of how the market works from a reaction point of view, if you're short and all your buddies are short and the market starts lifting, it's going to start hitting your stops or you're going to get out. But either way, when you're short, what are you going to do when you get out? You're going to close a short position. What do you do when you close a short position? Effectively, you're placing a buy order. So because there's lots of buy orders coming into a rising market, what does a rising market do with buy orders? It continues to rise because there's more buy orders coming through. It's rising because of buys and there's more buys going in. There are actually stops being hit, but so many stops are being hit because so many people are short, it makes its own rising effect or long effect. So that's why stay with me on this, you do understand it. When on USDJPY, when most people over the, even the last 2 years have an overall short view or a falling view of the market, when it does rise, it rises swiftly because of that effect of the stops being hit, which are buys, which means the market lifts quite quicker than anyone's expecting. So when you do have a system that involves the longs, although you don't get it, so many of them, they spark through and perform well, as shown here. And isn't it interesting? All these things come to light when you model them mathematically a lot better than dribbling through, screenshotting right down. Sorry, but I do it still, but I'm just trying to say to you, hey, there's a lot to be learned here, and I'm teaching you that. Now, While we're going, let's see how my trade's going that I was talking about before. Alright, there it is. It bounced up. It didn't quite get to the 101, and it's risen back up. We'll see what it does after that. That's on the ES. Alright. Greg mentioned last week that it's not possible to have connections to both Gain and ZenFi while using the free Ninja. Is this true, and how can we overcome it? Okay, it is possible to be connected to one or the other. Let me just clarify what I was talking about. Okay, on your screen, in a minute, down the bottom it says connected to ZenFi and connected to Gain. So I can right now bring up an E-mini chart and an FX chart at the same time, and they'll both be providing me data. For you guys with a free account, you can use both. You can use Gain and ZenFi, but you have to log out of one and into the other. That's the only difference. You can have both, absolutely, please do. But see here how I connect and disconnect? Sorry, just waiting for your chart. Okay, I connect and disconnect. Well, you can connect to FX or your E-minis. And if you finish with one, you'll have to unconnect that and then connect to the other to use it. That's all. So you can use them both. But if you want to pay for a live license and a lifetime multi-license thing, I don't know, it's the Mercedes-Benz of licenses, then I'm allowed to connect to both at once just because I like to. But it's not really necessary. Alright, we're going to keep on going. I'll spot a few more of these. Okay, here's another short, and that didn't work. I really want you to see the difference, because here we're looking at a system and it's not working, not working, not working. But then when you plot it mathematically over 2.5 years, it looks like a good idea. So I want you to learn that lesson when you're building your own. Here's a buy to cover, which means where it entered was also where I said it's close enough to also get me back out, which is one of my rules. Okay, there's a short that worked. It was getting within 45 pips at S3, and it worked. Now I think we've gone through all the ones that didn't, and what we'll probably see now is lots of stuff that works. There's a long that worked. It came within, I think it's 5 pips, is that what I said? 5 pips of R3, yep. So it would have said, okay, that's close enough, we're out, even though it hasn't hit the profit target because it's within that close zone. We're done. Now I'm skipping to each trade very quickly by control and then the left mouse button. There's one that worked. That's a short. So now we're seeing ones that work, and you know why, because you've seen my profit line. And we've seen it's a good idea. But I want to, and I'll keep saying it, make the point that if you put the time to test it over a long amount of time, you can see its longevity. And you won't judge it just by looking at it over a few days. That's a short that didn't. There's a long that did. It's a little baby trade. Now, there's some work for you to do. I'm guessing half of you are asleep because I'm not getting much response in the chat box here. I want you to grab your calculator, please. Or you can do some sums into your head, but I want you to do some thinking for me. We've learnt, for example, the R3 S3 idea. We learnt that in the workshop. That's now 3 weeks ago, I think, really, since I first mentioned it to you. We've mentioned the gap, but we haven't done too much on it, and now we'll be starting on a third thing, 20-1500 simple moving average. There's 3 trading ideas. As we go through our training of the 12 weeks, you can see that there's going to be an awful lot of ideas. Now, let's say we just took R3 S3 and we applied slightly different variations of it to the 8 different major FX, or the 8 different FX pairs. They're not all majors. So that's 8 trading ideas. And we may, or I'll exclude it, but you could also apply it to a few of the E-mini charts. So there's 8 of those. So that's 8 systems. And then you're using the idea that R3 and S3 are a magnet. Now what if you were to use R3 and S3 in 3 different ways? You used it as a magnet, you used it as price bouncing off it, and you used it as for separate systems, you only go long or short depending on where price is relative to R3 and S3, right? So there's like, say, 3 variations of that. And then let's say, so there's 8 different currency pairs and that you can apply this to, and then there's 3 different ways you can do it. So that's 24 trading plans right there. And then if we discuss 11 different approaches, I'm not saying we will, but if let's say we do that with 24 combinations with the gap. Okay, so 3 different ways of using the gap on 8 different FX charts. So it might be Euro USD, USD Japan, that type of thing. So 11 of those. You do the sums, that's 264 completely different and unique trading plans for the market. Now, even if you built all of them, do you think you'd have 1, 2, or 3 you're proud of? I'd hope that you're proud of all 264 of them, because in making each one, you might have made 2 or 3 you don't like. Okay, can you see how if you had all of them running at once, you'd do quite well? The bottom line is there is no reason why many more can't be very successful with their trading. Let's keep going. We'll look at a few more of these. There's a long to R3, and you can really see that effect of it, pulling it right up in. Okay, well that's that. With your pivots, R3, R2, R1, it needs to be set on intraday data. So I'm just going to go down and grab a pivot and discuss this with you so you're really clear on it. So here's my pivot, and I've got it on daily data. That's nice. Prior day open, high, low, close, calculated off daily bars. Wrong. Say calculated from intraday bars. Otherwise, it could give you trouble. Okay, so that's a key point, and that's what that Twitter was about. Is your computer 8:23 AM? Is it intraday? It should be Eastern Standard Time as well. As traders, really, there's no way around it. With your different trading softwares, it's just going to have to sit on US time, like it or not. While I've got you, please reply to me so I know where you're at. Who has built an R3, S3 system that they're happy with? All done, we can move on. 1, 2, or 3 of them? Yep, and done. Or I don't care if you've built a system and it doesn't work, but you have to have put in a lot of work and built something, whether it's worked or not. Otherwise we'll end up with 11 different approaches and we'll still be on the wrong side of the 95%. If you've had trouble, no worries. As long as you sing out and get some help on the forum or with us now, or find one way or another of getting help. That's the important thing. Okay, well, I'm going to announce R3, S3 a closed book, and we'll progress to the gap. Okay, I want everyone to load up their gap. Now, just this week when I was building some systems on the gap, I built my most stunning system yet on the gap. I was so excited about it. Think about the currency pair, USD Japan. What is half of the market you're looking at? The USD, okay? The US dollar. Right. The gap is drawing itself on 4:15 PM Eastern Standard Time. The close level, it's drawing that point. So it's taking a significant level from the main US business day, from the main US financial markets, and it's applying that to an instrument that's only half involved in the US, and the other half is actually the Japanese yen. But it's drawing that point in a 24-hour market that doesn't close. So it's drawing the gap in on an FX market, which is unheard of. Now, I'm bold enough to say I've never seen this done anywhere else in the world, and I think this is the only spot you'll ever learn it, been taught or done, because I've figured it out myself, to be blunt. And I've found it to be ridiculously powerful. It's something that, in principle, for the reasons I just explained to you, is very, very powerful. Okay, but and it's very well known applying a line like this on, say, the E-mini chart. That's a no-brainer, and a lot of people do that. But to apply it in this fashion is strong, it's powerful, it's significant because of all the fundamental reasons why how it works. But it's unique, it's something different and with a twist, which is what you need in a successful system. Okay, looking at a 2 moving average system is not going to get you anywhere because there's a lot of people already looking at that, of course. Or to elaborate on that, there's a lot of computers looking at that now that are way smarter than humans. So that's why we like this, because it's significant and yet with a twist. And what I pointed out last week was, I said this is how to load it, and this is vaguely some ways of looking at it, and I pointed out bouncing off it is pretty cool, but I left you like that, and I wanted to see what you would come up with. What I suspect is you've all been very busy. You don't have the luxury I have, which is spending all day, every day building systems. Okay, you've got many other things to worry about, so you haven't had the time. So I'm not going to go into detail with it this time, but I am going to point out in more detail the different ways you can use it, and I'm going to give you one more week to build your systems with it. But I'm not going to let that slow us down either. I'm going to then power on to 3 moving average systems. Okay, so I'm not going to slow up. So we're going to discuss a little bit, but I'm not going to give you the gold. Like what I mentioned with R3S3, that was gold. I told you, plain as day, here is a system, and the thinking behind it, how it worked, whether you like the system or not. I'm sure you learned a lot from it, and we'll do that with the gap too. But I'm going to wait another week until more of you have done it as well. Okay, different ways you can use it. Firstly, bouncing. I'll just get a crosshair up. I would call this right here a bounce. Your crosshair has just appeared on it now. Okay, that's a bounce. This through here is bouncing. Your crosshair's just caught to it now. I would call this here a bounce. I would call this here a bounce. Okay, now one bouncing system I developed with this, which frankly is one of the most exciting systems I've built yet, is based on just the gap, price action, and a particular time window, and that's it. There's nothing else. Okay, right there, that's a bounce. Okay, you can have all your wiggles and wobbles, which is what I call all the other indicators, but price levels are really strong. Because it's like the trenches in World War I. You just draw a line, you dig in, and you just stay there. Right? And that's what some really big traders do. They go, right, we're going to draw a line. It's going to be called the close from before. Draw a line right across. We're just going in here with a huge amount of orders. When it gets to that point, because we've got limit orders set there, price is not going to be able to budge much further. It's going to get tired and exhausted, give up, and decide, blow it, I'm going to head the other way. Okay, it's really powerful. That there. Your charts are just catching up. Right, that point there, that's a bounce. Now, USD Japan bounces in its own way. Each currency pair has its own personality. Okay, USD Japan does it this way. Euro USD will bounce another way. It probably won't bounce quite so much, because one thing I want you to consider about the Euro USD, very liquid, very exciting, but also because it's so heavily traded, what's that mean? That means there's so many trading systems being traded on it. Okay, huge amounts. Okay, so for all the reasons why you think your particular entry point should work, there's so many reasons why other entries are happening at that moment and price should be going the other way for whatever reason. We might do a session on this one time, which is if you take a market that's still very liquid but just slightly off the beaten track, you'll find some of the systems you build actually work better on it for that reason. Okay, bounce right there. Bob says, do I carry FX trades for more than 24 hours? Sure I do. Probably about a third of my trades I'll take for more than 24 hours. The longest I'll take them is probably two days, and it's probably because I'm just catching a real move. A move that you have decided is significant on hourly. I don't really step higher than hourly. After 2 days, whatever that reason was, is not going to be having an effect 2 days from now. Okay, on hourly. On daily is a different story. Okay, so we understand bouncing is one way. What's another way we can use it? Well, another way we can use it is breaking up or breaking down through it, being very significant. Having said that, all I can find is bounces. Okay, but if you have a bounce, and then for some reason, criteria in which you can say it's smashed through the gap, then it's like a breakout, but it's a breakout through a really significant point. We'll go back to World War I trenches again. It's like breaking through something that's really significant. Once you're past that line of defense, there's nothing stopping you. You're away, you're free, and it's a really decent line. So once it's through, it's free. So that's the second way of using it. I hope you're writing down these different ways of using it. Another way of using it is you could just say, if price is above the gap, then I just take buys that are based on completely different reasons, and I'll just have a buy bias. Or if price is below the gap, I just take sells. And to completely confuse you, another way you could use it is you could say, when price is away from the gap, I'm going to trade back towards it. You're like, wait a minute, Greg, you just said take buys when it's above, sells below. Now you're saying when it's above, trade back to it, when it's below, trade back to it. Yeah, I am. Think about this. Remember we talked about time windows, trading windows? Well, when the US cash market is open and price decides it's just going to head off in a certain direction, do you think it's just going to head that way and not slow down? I think it often can. And do you think during the US morning, in the very early hours when the European market is open, it could be more range bound, and if it has moved away it might want to head back to it? I think it could. So certain times of day are appropriate for a certain style. So the two things I suggested, which seem completely opposite, are very valid depending on the time of day you apply them. Remember, one thing I keep pointing out is the silliest thing I think you can do is take a trading style and think it's going to work through an entire 24-hour period. One of the smartest things I think you can do is take the same window of time, be it a 4-hour window of time, the same time every day, and apply your style. So that's giving you some more to go away with the gap. With all due respect, I know that you guys haven't done much with it, so I will wait till next week.